Welcome back. You're watching Stock Watch this week, and joining me to unpack your stock-related questions this afternoon is Kriegler from Kruger International. Start sending us your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. I am on my phone again today. Mia, thank you so much for your time. Really appreciate it. We have a lot of questions to get through today. Actually, quite a funny one is I ran away from MTN to Vodacom some time ago, but my gosh, dit is dieselfde devil. What's your take? Are they the same? Because there's also been this kind of thing that Vodacom's risk profile has changed a bit as it's also expanded to some parts of Africa. What do you make? Is it the same devil or not really?
Not quite, but they're influenced by the same thing. So if we consider the business margins and data especially, which has become cheaper and cheaper throughout the years, it's a business model that is actually being squeezed from a margin perspective throughout. So that remains the case for both. So that's similar. Of course, the jurisdictions in which they do business and the challenges of those jurisdictions are much different for the two companies, especially for MTN. We know that their exposure, especially in Nigeria, has been quite a challenge for them lately. Like many of the other South African companies that have ventured into that territory, it has been very costly due to the fact that the volatility of the Naira is so unpredictable and actually has a massive, massive influence, amongst other things. There's many other issues there as well, but on the reporting of earnings. So similar in terms of nature, of course, both businesses, but very different challenges that they face.
All right. Well, there is a question here on Cap Industrial. I don't know if that one is on your radar. So please comment on Cap share. Should I sell?
Yes, I wonder whether this listener is referring to Cap or to Cal, because I know Cal came out with the results today.
Yes. I think it's
yesterday.
Cap, the industrial company, Cap.
Yes, it's not a company that I follow that closely that I can give insights onto whether to hold or sell. No.
Well, actually, let's talk about Cal, because it was quite interesting because you saw flat revenue growth there, but managing to eke out gains there on the bottom line, seeming that there was a mixed picture where, for example, you're seeing the effects of inflation kind of presenting a double-edged sword and even a load shedding. Just talk to us about what you made of those numbers that came out of Cal. I did notice that investors did do some buying there on that share yesterday.
Yes. So, I mean, it's a very challenging environment for any company that's dealing solely in South Africa, and that's at the mercy of the consumer, especially in an election year where we know that people are more conservative towards the way they spend their money. And this year is no different. So, yes, they had challenges due to a weak environment for the consumer. Of course, the input costs, we've heard what massive influence the lack of infrastructure, especially the power, has had on them, what it's cost them as a company, an exorbitant amount of money. And, they managed to grow their headline earnings per share decently in this challenging environment. It's a company pretty well managed. They also diversified their business quite a bit the last couple of years, more into sort of the retail selling side, with the little shops at all the fuel stations that they operate, not only in the agricultural environment where they've previously operated, they've moved into the retail side as well. And that's really helped them from a diversification perspective on the earnings side. They have very big aspirations for themselves as a company, and that's always a good sign if management sees chance and it's sort of working towards bigger goals, especially in a country like South Africa, where the environment for a company like this size is especially challenging.
Yeah, indeed. We're talking about stocks that are geared towards the South African economy. All the panelists are punting the deep value of SA banks at present. If this is true, why are the big four banks not buying back their own shares at current depressed prices?
Yes, well, good question. Who knows? We'll have to ask them at a shareholders meeting.
Because
But yeah,
I remember, Mia, didn't Nedbank buy back shares last year?
and Standard Bank also did
Ah,
now
yes.
recently. So it's not that they don't, they do,
Yeah.
but probably not in the quantities that we see abroad, and that the listener particularly is wanting to see. But
Yeah.
I mean, we have seen Standard Bank also buy back shares lately, and as you say, yeah. So
Ah.
no, our banks are still well capitalized. They are still managed very well, run very well. They operate particularly good. But once again, this is an analogy that I've made previously on the show as well, is that when you just compare that to some of the international banks that we can get exposure to, it does seem that there's more opportunity for you if you look beyond the borders of South African banks. The South
Okay.
African banks also very exposed to our economy, to the debt profile in our economy, and of course to the fact that some of our banks and financial institutions are some of the largest buyers of some of the government debt. So those are the sorts of exposures that you need to take into consideration when investing in these banks.
Well, actually, there was a very interesting question yesterday making an example of Shell and Anglo American with kind of FDI leaving the country, and, asking if this may be panic and I don't know, maybe the whole phenomenon of a sell and may go away, although I don't think we've really seen a lot of selling this month.
No.
But just that negative sentiment towards South Africa, if this is maybe a good entry point to kind of go into SA Inc. at this point.
Look, this isn't a new trend. We've been seeing foreign direct investment leaving the country on a net basis for many years now. It's not something that happened now since Shell and Anglo looked like exiting South Africa. And once again, to make it very clear, it's not it was no statement from Anglo at any point. It was basically BHP coming to the table with an offer, sort of a low ball offer, and trying to buy specifically really the copper assets of Anglo American. That's really what this deal is about, much more so than about the South African assets being sort of a drag on the bigger asset base. Having said that, this is a topic that we've discussed to length on the show as well. The fact that mining companies in South Africa face even a tougher environment than most businesses due to the fact that they are at the mercy of the railways and at the mercy of the harbors. And they haven't been able over the last 5 years to increase their exports from South Africa on any of those commodities. So even if they can get the commodity out of the ground, which is already a challenge with industrial action, etc., in South Africa, deep mines in many cases, then they still have to get it to the ports and get it out of the country, which is a massive challenge by itself. So there are serious challenges despite the quality of the mining asset in the country. And that's sort of the whole balancing act here when you value these assets from a foreign perspective.
Yeah.
But as you asked, is it an opportunity for us to invest in SA Inc.? Once again, this is a tough year to make a decision like that. We don't know what the elections will hold. And, to be honest, the elections outcome has no immediate impact on the economy, really. It takes quite some time for the elective party to start changing, or be, either in a positive or a negative direction, the direction of the economy. So we always say, the economy and the stock market isn't normally sort of driven at the same point by the same thing. Over the long term, yes, but no, not over the short term. So from a South African perspective, it's a much bigger concern that the consumer is under pressure, that interest rates are high, and that people don't have disposable income. That places a much larger pressure on businesses in South Africa. And that's why when we consider our opportunity set as South Africa and the rest of the world, it still looks like there are better economic drivers for earnings growth when we look abroad than there are in general in the South African economy.
All right. Well, another company that is also geared towards the South African economy, although they did say, I think when there was a rights offer that they plan on expanding, is Purple Group. I don't know how deep on your radar that is. What's the story with Purple Group? I had full faith in their innovation, their association with Discovery Bank. Easy Equities being the next best thing, about 246,000. Do I sell out and take the benefit, or do I hold on for better days? Is there any hope? It seems that there have been improvements made there. I remember, I think in the last results, they did swing from a loss to a profit. But also, how significant is that?
Yes, the change with the release of the detailed interim statements was that the price went up nearly 17% on that day, and that was now in April. So you're right. I mean, it's a small cap. It's very volatile. You don't really, if you're an investor, not a speculator, and there's a big difference. I mean, if you're a speculator, who cares about the long-term perspectives of the company? You're actually trading on price movement. And I often get the idea that many of the listeners here are more speculative than investors. Investors, you look at the long-term perspective of the company and prospects of the company, and it's an innovative group of people, as you mentioned, for all the right reasons. They've been doing interesting deals. They've been first movers in the easy equity sector, for instance, in that space with share buying and giving that sort of to a much broader area of the market in South Africa than we've previously seen. So over the long term, the smart capital would say this could have a place in your portfolio. But once again, when you invest in small caps like Purple, you need to be ready for those 17% price moves on a day. And that shouldn't swing your investment decision making. Your investment decision making should be based on the prospects of the company over the longer term. So again, depends on your perspective and your position, what you want to achieve by buying a small cap share like Purple.
Well, Mia, as you're talking about maybe finding opportunities offshore, there was also a question on an S&P 500 ETF, and if there would be a difference between investing in the Satrix S&P 500 ETF or the Vanguard S&P 500 ETF. Are there any technical differences there for South African?
Well, it basically tracks the same underlying index, which is the main thing here that you're trying to achieve. You also consider how you access that. I mean, the Satrix you can access here through your local share accounts, where the Vanguard ETF you'll have to buy through an offshore equity account that you have there, which both is possible from a South African perspective. Once again, from this side of the fence, if you're buying it within a specific investment structure, it gets more complicated because you need to take a sort of a broader consideration in terms of, is it within a Regulation 28 portfolio? Does it count towards your offshore allocation, etc.? But basically, the exposure, if you're an investor and you want to get the exposure for the long term, the Satrix ETFs offer a great way for South African investors to access a lot of the international market as well, yes.
All right. Mia, actually, just something that has stuck out for me in terms of the gold miners. I mean, they're benefiting from high gold price, but you have a lot of them kind of reporting on different operational performance. For example, Gold Fields disappointed markets earlier on in the week, talking about some operational challenges there, weather events, but also an increase in all-in sustaining costs. And then we have Pan-African Resources and DRD Gold coming out and saying that they all-in sustaining costs have actually decreased. And even Sibanye actually spoke of some challenges in its gold operations. I mean, at this point, what do you look at when you are looking at these gold miners that, of course, have all benefited from the higher gold price?
Absolutely. There's a couple of things that I addressed already that I can reiterate on. But when it comes to the gold miners specifically, and we consider the gold price, gold producers and miners for that matter, have lagged the run up in the gold price significantly. And that is the major reason for that is basically the cost pressure that these miners face. Now, as long as we're in an inflationary environment, which we will remain, especially in South Africa, where we're an importer of not only inflation as a whole, but also in many cases the cost of power and fuel, etc., that will be a pressure on these miners. Again, as long as the infrastructure remains challenging for these miners to get the gold out of the country, it will remain challenging to be competitive on a global scale with exporting those commodities. So there is definitely a reason that the gold producers are lagging to an extent the rally that we've seen in the gold price. The bigger drivers, the longer term drivers remain, is that there is a limited amount of gold. Gold is sort of, over the last 18 months or so, taken a much different move into the global economy in terms of how it's been utilized, by which economies it's actually been bought, why many of these governments have actually bought substantially into gold, what their motivation for that is, etc. So there's a big sort of dynamic and shift, it seems to us, in the gold buying area, and that will ultimately play through to the gold producers. Unfortunately, South Africa is only the 11th largest producer of gold these days in the world. We're not a major player anymore. We're not a cheap producer of gold. And these companies in South Africa really struggle because they've got their backs against the wall with all these challenges.
All right. Well, Mia, let's get to your stock pick for today. What are you hanging your hat on?
Yes, well, I like the fact that listener asked about the S&P 500 ETF, because I think broad-based beta exposure in the market isn't a bad place to be. What we've been seeing, especially through this earnings season in the US, is we've seen sort of the breadth of the market improving, where the earnings have been driven over the last 6 to 12 months to a great majority by the Magnificent Seven. That has actually expanded to an extent to a larger part of the market. So also by having a broader diversification, your risk is also better addressed. So if we do see a sell-off, we know that stocks like the Magnificent Seven normally tend to react in a more pronounced way than the market does, and that will potentially sell off more than the market does, for whatever the reason might be. So we like to, at this stage, broaden our diversification a little and move some of our tactical bets that we've had into the beta sector of the market, which is basically the broad market exposure like the S&P 500.
All right. Well, thank you so much for your time and for your analysis today, Mia. Appreciate it. That was Mia Kriegler from Kruger International.